Imagine walking into a bank and discovering that the rules are completely different depending on how much money you have. Same building. Banks don't simply store money. They sort people. Let's start at the bottom. A teenager opens a bank account. The teenager becomes an employee. The employee buys a car. Then something changes. The customer begins borrowing. Think of a bakery. Flour sitting in storage earns nothing. Bread sold to customers generates revenue. Banking works almost the same way. Your deposits are the flour. Loans are the bread. The bank takes money from millions of people, pulls it together, and lends it back out at higher interest rates. That's the core business. Simple on the surface. Massive underneath. If the bank gives you 3% interest on your savings account but charges someone else 11% on a loan, that gap becomes profit. Now multiply that across millions of customers. Millions of credit cards. Millions of mortgages. Millions of monthly payments quietly moving through the system every single day. This is why banks care so much about lending. Not because they want people to succeed financially. Because debt is predictable revenue. Every month, payments arrive. Interest accumulates. The machine keeps moving. And the strange part is most people never really think about what happens after they deposit money. They imagine the cash just sits safely inside a vault somewhere. It doesn't. Modern banks move money constantly. Your deposit today may become someone else's home loan tomorrow morning. And once you understand that, the entire banking system starts looking less like a storage facility and more like a giant financial engine. One built entirely on movement. As your financial life grows, something else grows with it. Data. A shocking amount of data. The bank knows when your salary arrives. Knows which restaurants you visit. Knows how often you shop online. Knows when you're struggling financially. And sometimes, it knows before you do. If your spending patterns suddenly change, algorithms notice. If your account balance starts falling every month, systems flag it. If your income rises sharply, new financial products begin appearing almost immediately. This isn't science fiction. Modern banks spend billions building systems designed to predict behavior. Because prediction is profitable. If a bank can predict that you'll need a car loan 6 months from now, they can start targeting you before you've even started looking for a car. If they know you're likely planning to buy a house, mortgage offers suddenly begin appearing everywhere. And here's the uncomfortable reality. Most customers think they're only using the bank. Meanwhile, the bank is also studying the customer. Quietly. Constantly. Every transaction becomes a tiny signal. Every signal helps build a financial profile. How risky are you? How profitable are you? How likely are you to borrow? How likely are you to miss payments? Banks don't just manage money anymore. They manage information. And in modern finance, information is often more valuable than money itself. Most people believe they're simply customers. But inside the banking system, there's several things at once. Their deposits provide funding. Their loans generate interest. Their habits generate data. Every swipe of a card creates information. Every transfer reveals behavior. Every payment tells a story. And banks are very good at reading those stories. This creates a strange situation. The customer believes the relationship is simple. I store money here. But the bank sees something far more detailed. A future borrower. A future investor. A possible risk. A possible profit source. A long-term revenue stream. And once customers move higher up the financial ladder, the treatment starts changing fast. The emails become more personal. The waiting times become shorter. Special account managers appear. Premium cards arrive in black envelopes that look like luxury invitations instead of financial products. At first, it feels flattering. Exclusive. Almost glamorous. But underneath all of it is a very calculated decision. Banks invest more attention into people who generate more value. Not emotionally. Mathematically. And this is where the hidden hierarchy inside banking begins revealing itself. Because the farther wealth rises, the less banking starts feeling like a public service. And the more it starts feeling like a private club.